Discounts are fading. Why Russian oil is becoming expensive for India. The discount on Russia's flagship crude oil, Urals, for Indian buyers has dropped to its lowest level since 2022. Once a hallmark of Russia's pivot to Asian markets, the discount now stands at just $2.25 per barrel, a clear sign that Moscow no longer feels the pressure to offer deep cuts. Beneath this shift lies a powerful message: Russia is regaining control over its oil trade. Shifting balance of power. In the wake of Western sanctions over the Ukraine war, Russia turned to Asian giants like India and China, offering oil at steep discounts. India, in particular, benefited by importing large volumes of cheap Urals crude. But that dynamic is now shifting. With Russia expanding its exports to other countries, including Turkey, and supply becoming tighter, competition has intensified. As a result, Russian firms have reduced the discounts they once freely offered. In other words, buyers are now chasing Russia, not the other way around. India's strategic misstep. While large Indian refiners like Reliance and Nayara Energy had the foresight to lock in long-term deals with Russian suppliers such as Rosneft, others were not so lucky. Those without such agreements are now being forced to buy at higher prices or look elsewhere. This should serve as a key lesson for India. Short-term gains from discounted deals are no substitute for long-term strategic planning. In a world of volatile energy markets, discounts don't last forever, but relationships do. Russia's confident comeback. Far from being isolated, Russia has successfully reoriented its oil exports, especially to Asia. It has found eager buyers and is now setting its own terms. This remarkable turnaround shows how resilient and adaptable Russia has been in the face of sanctions. The reduced discount signals a new phase, one where Russia holds greater leverage over its oil pricing, and buyers must adjust accordingly. Conclusion: discounts fade, interests endure. The era of cheap Urals oil may be nearing its end, at least for buyers without firm contracts. What remains crucial is how nations align their economic interests with long-term energy security. In the great chessboard of global energy, discounts are temporary, but strategy is forever.